This is the Martini Mortgage Podcast with Kevin Martini.
Hello and welcome. I want to start out with an example. Let's assume that you have found an amazing place to call home in a quiet neighborhood, and that home costs $250,000. Now, let us also assume there's an exact carbon copy of that home in the exact same neighborhood with all the same fixtures that you are personally in love with, and it's across the street, and it also has a purchase price of $250,000. Let me make sure I have set this scene appropriately. Two exact homes in the exact same neighborhood with the exact same purchase price. Are you tracking? You buy one of them and I buy the other one. Now, on the home you buy, you put 20% down. Good for you. On the home that I buy, I put 5% down. So you have a $200,000 mortgage and I have a $237,500 mortgage. Since you're putting 20% down, you will not have private mortgage insurance. However, since I am not putting 20% down, I do have private mortgage insurance. Make sense? Now, let us fast forward into the future. Let us say 5 years from now. Who has made more money? Me or you? Hi, I am Kevin Martini, and I am the host of the Martini Mortgage Podcast. And this is episode 43, and we are going to be talking about private mortgage insurance. Oh, by the way, I am not just the host of the Martini Mortgage Podcast. I am also the branch manager and senior mortgage strategist of the Martini Mortgage Group at Benchmark Mortgage, which has its HQ here in Raleigh, North Carolina, the capital of North Carolina. Now, let me go back to my question. You and I have just purchased the exact same home in the exact same neighborhood with the exact same price point at the exact same time. Now, for conversation purposes, let us say we purchased this home in January 2019. As a primer real quick, you put 20% down and I only put 5% down. If we fast forward 5 years, who would have made more money on the home? Well, to answer this question, I would look at the home price expectation survey that is done by a company called Pulsenomics. Pulsenomics is an independent research firm that has expertise in data analytics. Now, every quarter, they survey a distinguished panel of over 100 economists, investment strategists, and housing experts regarding their personal 5-year expectations for the future of home prices in the U.S. Now, I personally believe that home prices expectation survey provides a realistic prediction of future home values versus one person's opinion or one company's opinion. According to the most recent home price expectation survey, if you purchased a home in January 2019 for $250,000, then in 5 years, and that would be January 2024, that $250,000 home that you purchased in January 2019 would be worth $289,520 in January 2024. Yes, according to the home price expectation survey, in 60 months, there is a $39,520 of potential growth in family wealth solely on the increase of home equity. Now back to the question, who has made more money on the home, you or me? Here is the answer. Wait for it. We both made the exact same amount of money on the home. Based on the data from the home price expectation survey, you made $39,520 in this example. And also, I made $39,520 in this example. Now, here is a hashtag Kevin Martini Live talking point. Number one, cash on cash return. I made more money, but that's for another episode. But really what I say is home values do not have a relationship to the mortgage value. It doesn't matter if you put no money down on a home. It doesn't matter if you put 5, 15, 20% down. Heck, it does not matter if you paid cash for the home. The market will determine the value of a home in the future, not the mortgage. No matter how many times you have purchased a home. I mean, if you are the 5th time or a first-time home buyer, I believe there is no substitute for education and trusted advice. I also believe from the bottom of my belly that homeownership creates wealth for a family. That is why I founded the Martini Mortgage Group. And that is why I produce every week the Martini Mortgage Podcast. I have found that many people overestimate the amount of money that is needed to buy a home. The Martini Mortgage Group at Benchmark Mortgage has many mortgage programs that allows a home buyer to purchase a home with a low or no down payment. Yes, someone can purchase a home with less than 20% down payment. Now, when you do this, you will have to pay something called private mortgage insurance, which is also known as PMI. Private mortgage insurance is not a bad thing. It allows someone to buy a home with less than 20% down. Now, according to the highlights from the Profile of Home Buyers and Sellers, which is published by the National Association of Realtors, the average down payment for all buyers last year was 10%. For first-time home buyers, that number dropped to 5%. Here's another hashtag Kevin Martini Live talking point. A large number of buyers last year had private mortgage insurance, and PMI did not stop these families from buying their dream home. The absence of 20% down does not create a barrier to home ownership. Now let me define what private mortgage insurance is. According to Freddie Mac, private mortgage insurance is an insurance policy that protects the lender if you're unable to pay your mortgage. It's a monthly fee. It's rolled into your monthly mortgage payment, and that is required for all conforming or conventional loans that have down payments less than 20%. Once you have built that equity of 20% in the home, guess what? You can cancel your PMI and remove that expense from your mortgage payment. Now, there is no question that private mortgage insurance is an added cost. However, PMI enables one to buy and begin building equity versus waiting 5 to 10 years to build enough savings for a 20% down payment. Private mortgage insurance is a good thing. It's not a bad thing. And private mortgage insurance is not something that one has to have forever. It can go away. Now let me go back to that example. That exact home we purchased, you had put 20% down and I did not. Based on the amortization and data from the home price expectation survey, in about 3 to 4 years, I will be able to eliminate that private mortgage insurance and no longer have it on my payment. Now, if you have a 5% purchase price today in your pocket, and if you are waiting to buy to save enough for a 20% down payment, that would mean, you would need $37,500. So in 5 years, if you were able to save $625 a month, you could do it. In 5 years, it would be $2,024. In 5 years, that home that you could buy today for $250,000 would cost $289,500. And that means the cost of waiting to buy cost $39,250. Wow. That is a lot of money. Down payment should not be the barrier. Private mortgage insurance is the answer. Let me bring this episode to a close. With an open heart, it doesn't matter if you're a first-time home buyer or a repeat home buyer. Right now is an amazing time to buy real estate. Right now, it's time to stop renting. Right now, it's time to move up and lock in a killer 30-year fixed interest rate. If the right thing for you and your family is to purchase a home this year, buying sooner rather than later could lead to substantial savings. Do not fret if you do not have 20% to put down. Private mortgage insurance is available, and it is a good thing. Many potential buyers not only overestimate the down payment that is needed, but they also overestimate their credit score that is needed to buy. But that's a totally different episode. As a teaser for that episode in the future, a trusted mortgage strategist can help someone with a credit score as low as 580. A trusted mortgage strategist can help someone that had a negative credit event like a bankruptcy or a foreclosure. Bad things happen to you. It does not define you. The first step is loan. The second step is home. If you want or need trusted advice, then give the Martini Mortgage Group a call and set up a private, confidential conversation. Is the information free? Absolutely. But just because it's free doesn't mean it's not priceless. Thank you for tuning in, and for more information to help you make an educated decision on buying real estate and securing a mortgage, visit www.martinimortgage.com. And if you're on the Instagram, check me out at Kevin Martini Live. If you need or want trusted advice, then just give me a jingle. 919-238-4934. Cheers.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings, while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.